Intergiro was a bootstrapped Swedish banking-as-a-service provider with 20 million euros in revenue and almost 100 employees. They had just hit profitability, and then overnight, it was all gone. Today I'm speaking with Nick Root, former CEO of Intergiro. The company was serving 40,000 clients when the Swedish regulator revoked its license. A month later, Intergiro filed for bankruptcy. Nick talks about the TV reports that preceded the decision, how a years-old investigation suddenly came back to life, and the lessons he would share with other founders building in regulated industries. Please note that I did not investigate the details. This is purely Nick telling his side of the story. I'm Lars Markel, and this is the Embedded Finance Review podcast. Alongside the podcast, I run a newsletter and host events, all focused on helping non-financial brands navigate embedded finance. If you are exploring embedded payments, embedded banking, or lending for your company, I offer free intro calls. I'll share what I know, give you honest feedback, and if it makes sense, connect you with providers I trust. You can book a call via my website. And now, let's dive in. Hi, Nick. Welcome to the podcast. How are you doing today, and in what part of the world are you located right now?
Hey, Lars. Thanks for having me. I'm pretty good, thanks. I'm in Lisbon, or pretty close to Lisbon in Portugal.
Thanks for joining and talking about your story. Obviously, we will dive today into the whole development and all thing that happened around Intergiro, the Swedish banking-as-a-service provider. Instead of going through it chronologically, I decided let's maybe jump right into a little bit more recent day to June 2025. That's obviously when it was a crucial date for the company. Maybe you can explain to us and to listener what happened in June 2025.
Yeah, of course. So that was a critical moment for lots of us in our lives, I would say. We lost the license in June 18, 2025. And it's a pretty complicated story, but at the most high level, the most macro level, we lost our license for administrative AML failings from a 2021 data set.
How did you find out about this case of losing the license?
So we found out when everyone else did. So we had an email on the Tuesday that week from the regulator saying, you're on the agenda for the board meeting tomorrow, but we can't say anything else. And that was the Wednesday was the board meeting. And then we got an email Wednesday afternoon saying that decision has been reached, but we can't mention it, or you're going to learn when everyone else learns about this on our website at 8 a.m. Thursday morning. Well, actually, maybe it was Wednesday morning. So all of us were up at kind of 7:59, pressing refresh on the regulator's website, and we learned with everybody else, and we were in complete shock. And this is, we weren't expecting it at all. We didn't really have any indication that this would be the outcome. And so that threw us then into a wild mess, as you can imagine.
I can imagine for any fintech listeners out there, that must have been, whatever happened before, must have been an extremely stressful and complicated period. And obviously, we jumped right in what happened in June 2025, but obviously a lot of things happened before that came to that fateful day, so to say. So maybe we can take a little bit of a rewind, and maybe you can give a quick introduction about yourself, who you are, and how did you actually end up building Intergiro in Sweden?
Absolutely. So I'm Nick Root. I'm an entrepreneur. I'm English. I'm from London. I have a technical background, but like most English kids or London kids, I went into banking. If you're numerate and you like numbers, that's where most of the roles are. So I did that for the first 10 years of my career in huge, big banking institutions. And then when I got to my early 30s, I went a bit more entrepreneurial. And I'd kind of had enough of the rat race. I wanted to build things. I knew that that's what I wanted to do. I was already at that time, this is kind of 2015, 2016. I was already messing around with blockchain, Solidity. I released on Ethereum in 2015. And I think I was already coding with it in 2015, 2016. So I did a load of crypto projects, mostly on my own. And most of those didn't work out very much. But eventually I met some entrepreneurs that had a license application already in. It was a Swedish guy and a French guy, like a French entrepreneur. He was an exec at HiPay, which is one of the big French PSPs. And the Swede was like a media guy. And I met them, we got on really well. And I came in as like a late co-founder on the project. I actually arrived just as the EMI license landed. I think I came in March, and then the EMI license landed in April that year. So I then created the vision, and my big thing then was basically programmatic finance. I thought it was inevitable that finance would be automated, and I thought it was pretty crazy that finance teams couldn't move money with a code very easily back then. And then that obviously evolved into embedded. So this was 2017, 2018, and then Angela Strange from Andreessen Horowitz, proclaimed that every company would be a fintech, and that was, I think, 2019. So we were really early on that embedded curve.
For sure. And maybe you can tell us a little bit then about the kind of products that you were offering with Intergiro and the customers you served over the years.
Yeah. So we originally had a B2B product, API based. It was just a very simple IBAN with FX and cards. But we noticed that a lot of our clients were asking us questions about whether or not they could offer that to their clients. So if they could add it into their product and make it available to their client base.
So earlier it was more like kind of like a neobank, kind of like SME banking solutions for the SMEs directly. And basically you found the platform, the digital solutions who said like, I want to embed this into my platform.
Exactly. We kind of inverted it. So we had a B2B offering, and then we realized that there was this enormous opportunity for embedded. And we basically did a bit like the Amazon trick. They built the bookshop, and then they exposed the technology of the bookshop and made that available as a service with AWS. So that's exactly what we did. We built the B2B facing platform, and then we inverted it and made all the onboarding, the cards, and the wallet management and everything available embedded. The early use cases were everything from marketplaces, other neobanks, crypto providers. It was pretty open back then. But I mean, in the end, we were serving it was about 20 or 30% crypto platforms, about 20 or 30% marketplaces as well. And then a few others were coming in as well. Creator was coming in pretty strong as well at the end.
Yeah. And then what size of the business was like Intergiro then, like by 2024, early 2025?
So we had just under 100 employees. We had about 40,000 clients. We were doing about 600 million euros a month of the payment volume. The top line was at 20 million, and we were break even as well. We just hit break even mid 2024.
And correct me if I'm wrong here, but I think also Intergiro was never the company that was like mentioned with like massive funding rounds, right? So there was not the typical like VC funded journey before that.
No, absolutely not. We did it all with our own money, bootstrapped, which in that kind of industry, I think is actually unheard of. I think now with AI, actually, ironically, it's probably there's potentially more examples of that. But back then, no one was doing that because we were like a Visa MasterCard member for issuing and acquiring, and we're issuing on the two schemes. So that takes on its own at least €1 million of collateral, and then all the engineering. Like we were a full stack. So my vision was that embedded eventually would become a margin squeeze, and you had to own the stack. So we built almost everything in-house.
But a lot of investment. I mean, of course, like anybody who follows the European or generally the worldwide like BaaS development, typically those are the companies who have massive funding rounds to build all of this.
Yeah.
I guess you maybe were in a good position, quotation mark, to find some customers early who were also able to spend and grow with them. But nevertheless, obviously a substantial investment required.
Well, yeah. I mean, we didn't find profitability it was a gradual profitability curve, but it did tick up much more in late 23, 24, when, we were doing the crypto ramping, on and off ramping. That's when there was quite a lot of margin in that. But we experimented with a lot. I mean, we learned pretty early on that consumer card programs, there's not much money in them in Europe. So we were moving towards the corporate plays much more.
Yeah, that's, I guess, a common theme in the BaaS landscape anyway. So we understood like where Nick is coming from, also how Intergiro started, the size and the business. Then obviously we spoke at the beginning already about the June 2025 date when the license was revoked. But obviously that decision was made on things that happened like way earlier. So maybe you can tell us like from the Intergiro history, like when was it the first time that you had interaction with the regulator and what was exactly happening around that time?
Yeah. So they reached out to us in March 22 and they said, we're doing a sector-wide survey. We've got kind of political remit to investigate EMIs because of the elevated money laundering risk. And they were like, we want to come and have a look. And they came in and we met them. We had a big meeting with about 10 regulators and about 3 of us, which was kind of scary. And then a few weeks after that, they said they wanted to include us in a wider sector review they were doing. And they added us to an investigation. Well, they called it a survey at the time. It wasn't even an investigation. It was a survey. And they added us to a survey that they were doing with Klarna and Loomis as well. And you obviously know who they are. And so they kicked off the investigation in about April 22. And then we got our first criticism from them in March 23. So they took everything. But critical to understand is even though they came to us in April 22 or March 22, the investigation actually focused on 2021 business. It was April 21 to April 22. That was the window of everything that they were sampling. And we got our first criticism, our first letter from them criticizing our administrative processes in March 23. And it was pretty like the advice that we had from the legal team. I never forget that meeting. We had some consultants that were helping us. And they said, if I was in a meeting with Swedbank, this wouldn't be a problem. There'd be no risk to your license. But because you're so small and they could easily wipe you out without any systemic impact, then you should be taking this very seriously. That was the advice of the consultants. So we did.
Understood. And what were the findings exactly? Like what have they brought to you in?
It was 3 things. They criticized the business-wide risk assessment document. They said that it wasn't deep enough and detailed enough. They criticized a few of our KYC files. They said on the higher end of things, they wanted more economic research on the KYC files. And they said that our police reporting was immature. Well, it was lacking. It was late often. And there were some cases where the police reports were missing completely.
Okay. And what was your thinking, feedback around these findings?
I think they were right. You got to remember the other critical aspect of the context here is 2021 was our first year of any commercial traction. So it was pretty much an engineering project from 2018, 2019. We had a bit of volume in 2020, but not very much. And in 2021, it ticks up. So this was our very first year of operations, right? And so for us, it was almost obvious that all the AML, and not just AML, the general processes would be immature, right? That's the point of AML. You're meant to improve over time. You're meant to be worse yesterday than you are today, and tomorrow you should be better than you are today. So we readily admitted it. We said, okay, we're working on this right now. We created the most ambitious remediation plan that I think we could have ever even conceived. It was crazy. I mean, we basically redesigned the entire governance framework of the business, even more wide than AML, all governance. So we redesigned everything from the board all the way down to the operations, committees, approval levels, like reporting lines. We hired a visa exec, like an ex-visa exec on the board. So that was a huge hire at the board level. And to afford all this, because we didn't, this was a lot of money to do all this, we made half the business redundant, none of the compliance or anyone. So the compliance aspect of the business went from 10% of the headcount to about 40% of the headcount.
So you basically let go like product, technical, sales, business development teams to refocus on the compliance efforts.
Exactly. We stopped all onboarding. They didn't ask us to. We stopped all onboarding and we cut half the business and we offboarded the most high risk businesses we had on the book to make sure. And our message, we were trying to create a message to the regulator that we're serious about this. And to be honest with you, we didn't know that we could achieve such an ambitious plan, but we did it. And by the end of December 23, we had completed the plan. We'd remediated even more than their criticism, things like transaction monitoring, which they didn't actually criticize. We had a completely new transaction monitoring system. So we were quite happy with ourselves at that point.
I can imagine, and I guess like that also, like for a lot of listeners out there who have built fintech businesses, obviously none of us know all the details about Intergiro and the exact findings, but I think what you mentioned before, especially at the beginning, that there are some findings. Obviously, you're still doing financial services, so it should not be anything substantial. But nevertheless, I think there's probably more than one successful fintech founder out there as well who says like 0 findings would maybe also be wrong, because it would mean, especially in the early days, we have maybe over-calibrated for that too much. So I guess that there are some findings. It's not a big shocker, but obviously at the beginning of the podcast, we spoke already what the result was of all of that. So clearly that plan that you put in place and do the efforts was, I don't know, somehow not enough, or it was not seen maybe more by the regulator. So interesting, you implemented the remediation plan. You probably from your business or as a founding or a management team thought like, okay, now we corrected these mistakes. Now we are ready for substantial growth. So maybe tell us a little bit like what happened in the year then 2024 after you implemented all these changes.
Yeah, so to our surprise, the regulator was very uninterested in our remediation plan. They asked a few quick follow-up questions straight after. We had to come out with this plan within 2 weeks. So they wrote us this letter in March. We hired the top compliance agency in Sweden. They cost a bomb. That's half the reason why we had to make half the team redundant. We couldn't afford them otherwise. And they basically worked with us intensively to create this plan. But we had 1 or 2 questions on the plan straight after we handed it in, mainly about the business-wide risk assessment. They wanted to see that first version of that because the first part of our plan was to rewrite the business-wide risk assessment, because that's logical, right? Because everything else should fall from the business-wide risk assessment and from the result of that. So our first big thing in the remediation plan was to redo the business-wide risk assessment. They asked us to see that, but then after that, there was nothing. They didn't ask us anything. So we wrongly assumed that was approval, or that they were happy with the plan. So for almost all of H2 23 and the whole of 24, we heard nothing substantial, just a few admin questions, but nothing. In fact, we were chasing them. We were like, hey guys, can we please close this? It's been years and there's been no more findings. We've replied to all your questions and you haven't got any more. So can we close it? And they were saying, yeah, we're working on it. We've got a big backlog. I even remember the case handler just before Christmas, he joked with us. He said, yeah, we're working on trying to get you an early Christmas present, but it might be in the new year. So we were like, okay, that's a weird thing to joke about. But we were like, okay, well, at least it's progressing. So yeah, we were just building the business. It was quite hard because you couldn't really raise money with something like that hanging over you, but we were making do.
Of course, in any due diligence, this would come out that there was something ongoing and there was no formal conclusion to this.
Ethically, I couldn't bring a new investor in and not tell them about that myself, of course. So we were holding off of this investment as well.
Understood. And then what happened next? I mean, obviously, I know the story that there was a journalist reporting coming out. Maybe you can walk us a little bit through what happened, when did that happen, how did you see it from your perspective?
And this is where things get very, very weird. Okay. So in about Q4 24, a few ex-employees began to call me up or text me and say that they've got this journalist calling them up and asking them questions. And we were like, okay, strange. But it kept happening. And then he began to call, workers, employees. And the angle seemed to be that there was a data leak in Europe. There were some scammers that got uncovered. And I don't know if you know how this works with journalists, but often they invite all the journalists in, and then the journalists, they take away what's local to their country. Okay. So unfortunately, one of our clients had handled some of this scammed money, and he was locking on to that, and we were the only one in Sweden, so he was trying to make a meal of this. But it was like,
so to understand, you were the banking as a service provider, you had one of your clients, fintech or marketplace, whatever, who was using you, and they were onboarding individuals or businesses, and some of this fraud that had happened through these accounts, basically. That was basically
money was laundered that way. So the scam had happened in Europe, and then they were moving the money through these various accounts, and it happened to one of our 60,000 clients. And, this happens all the time, right? We're closing down a client weekly, right? And we're investigating things almost every day, right? So this wasn't really news to us. We worked out we were like 0.5% of this total fraud. But he made a big meal of it, and he was obviously trying to get clicks and trying to get eyeballs, right? He's trying to get viewers. And so that was his angle. And he was trying to claim that we had been negligent on the business, and he created a story that we onboarded a shelf a company or a front a company, and that it was still ongoing. And it was obviously nonsense. We'd closed that case a year and a half before. We'd already collaborated with the Lithuanian police, and I think at the time they'd already been prosecuted. So this was for us completely old news, but he made a TV show out of it, and he aired it in Q1, I think it was March 25. And it wasn't a TV show about us, it was a TV show about the scam and the scammers. And then it mentioned that we had been used for some of the proceeds. And then it just got weirder. So we thought that was over. Then he began, it's quite hard to explain this, but he obviously needed to get more clicks and more eyeballs. So he fabricated a story that Intergiro was conceived and run by a cabal of criminals.
So the first thing was like fraudsters were using accounts that were eventually like handled by Intergiro to transfer the money. And then the second allegation was that the owners or some of the owners of Intergiro are criminals.
But it was more than that. It wasn't just that a few of them were criminals. He made a claim. So he linked it to a famous Swedish white collar criminal, a guy called Thomas Gisander, that I'd never heard of. And he claimed that he had formed or was running the business secretly, and his crime gang was running the business.
Okay. Quite some intense allegations.
When we heard that, we didn't know what to think. It reminds me of a quote from the Titanic. We heard a tremor and we were more amused than worried, and that's kind of how we were like, this is crazy. We did hire a consultant, and he kind of helped us through it. His advice was just don't engage with these guys, because the channel involved has got a reputation for being, conservative with the truth or shaping the truth for their narrative. So they create a narrative that they can think people want to see and is interesting to the wider public, like money laundering and like this criminal that everyone in Sweden knows. And then they they cherry pick and twist and look for things that can be plausible to the story. And then they just create that. And so it went more and more, and they ended up airing another TV show in April where remarkably the head of the Swedish financial regulator, the SFSA, Daniel Barr, was on this show being interviewed and was being grilled by the journalist, where he was saying, how can you let a criminal organization be run or be regulated in Sweden? And the head of the regulator was like, he obviously wasn't prepared for it. I don't know what he was doing on that TV show.
Rather uncommon to see in such like ongoing investigations or activities of the regulator appearing on TV, from my perspective.
Was when I knew we were in trouble. And as you can imagine, 1 week later, maybe even less than 1 week, the sleepy old AML investigation or survey from 2022 burst into life. Okay, the regulator wrote us a new letter saying that they are rescinding, or they are revoking the old results, the findings, part of the investigation. So they're removing that part and they're replacing it with these new findings. So still from the 2021 data set, completely irrelevant now for the business, but they are replacing that. And they wanted us to, and it was a 20-page email, a letter. They wanted us to reply on all these. And we knew that it was obviously they were being captured by the journalist, not only because of what we watched on the TV, but one of the companies that they asked about in that list was not in the original 2021 data set. It was the one that the journalist had asked about, this Lithuanian company. So that was the kind of the smoking gun where we knew that this was all linked to the journalist, and he had captured the regulator in that regard.
So to summarize from my perspective, at the end of 2024, first thing you hear is some of your employees get inquired by a journalist. So there's, okay, what is happening, what's ongoing? Obviously, you don't know more. Then the first TV reporting breaks. And you already think probably, okay, how do we react to that? We've done probably what we could have done. How do we proceed? And then the next TV recording or the TV report happening, hiring, involving an agency to help all of that. The plan more is to not investigate or not to engage so much with this journalist, because obviously that's probably what a lot of people also agree is in a way a risky field, even though you're not done anything wrong, but obviously you're in a completely unknown territory and you might be dragged through the ring, so to say, if you're not able to handle that game. So trying to basically just ignore all of that, so to say, in one way, at least publicly, but then obviously with the regulator picking up the story after they appear on TV themselves, you realize, okay, this could become an issue for us, right?
Exactly.
What happened after that? I would hope or assume there's then an ongoing discussion around the findings, and you're trying to explain what you said right now, or what happened after that?
What I imagine, if I was the regulator, I would have called up the board immediately and I would have asked them about everything that was mentioned in the TV show, but nothing like that happened. They did call us in for one meeting to ask us about the cap table, but that was before the TV show was aired. So we knew that the journalist was working with the regulator before anything was aired and before we knew the story even. And so that all became clear afterwards, but they never revealed or engaged with us in the dialogue about the TV show, really. And then we replied and we were really happy with the response. We did maximum effort, maximum detail. And that was I think that was in May. And then next up was that email I told you about in June, which was said that, oh, you're up for board decision tomorrow. And ironically, it was the guy, the head of the regulator that they got on the TV show and they grilled him about us. He was in hot water as well. He was in the process of being fired for some conflict of interest, a business. So he was, it was the perfect storm because he was susceptible to media pressure, maximally at that moment. And the board meeting that they had decided on us was his last day in the office. So he was making a mic drop. He was trying to say, I am a good person. Look, I'm killing this criminal organization. So it was the perfect storm against us, unfortunately.
Crazy. Understood. Okay. And then what happened then after you read it on the website that your license was revoked? Was already the moment you knew everything is over for the company, or what were you thinking?
I mean, you go through every imaginable emotion and every bit of hope. And the immediate effort was to try to get a legal injunction from the administrative court. So we hired a legal team and we prepared the appeal and we asked a administrative court to pause the decision while we launched on mainnet, but the administrative court threw it out. They didn't even review it. Fortunately, this is one of the features of Sweden. The administrative court is pretty powerless. So when it comes to the regulated decisions, they very rarely challenge them. So that got thrown out. And then it was really a matter of, making sure that our clients got their money back. It was 600 million euros flowing through the system every month. And that all just got kind of frozen, right? Because Visa, MasterCard, and you can imagine these complicated treasury operations where we've always got this net position with Visa, MasterCard on issuing and acquiring and all the banks and all the FX and stuff, and everything just gummed up. So, I just went through hellish few weeks just trying to get all the money back to clients. And I'm very proud to say that everything was accounted for down to the last cent. The safeguarding rules and procedures that we had worked perfectly.
And again, for those listeners or viewers out there who know about BaaS companies collapsing, probably know the case of Synapse in the US as well, where obviously a lot of different things have happened, but also resulted in a lot of money went missing and customers were left without money, at least for a time being. And a lot of this has to be refound and understood what happened. So obviously that's at least a positive outcome that nobody lost money in that regard.
From that perspective, it was kind of textbook where I think, all clients got their money back, at least clients that claimed it, and everything was accounted for. There's even a road, I don't want to say too much, but there's even a road to pay back all creditors. So it's a textbook bankruptcy, I think, up until now. But I think something to be said, people don't talk that much about bankruptcy because, it's that thing that everyone wants to avoid. But, it's a very interesting moment, especially if, like us, you didn't see it, because most businesses, they kind of see it down the road and they kind of and they're like, okay, we're not profitable enough, or the product's not working, or blah, blah, blah. We didn't. So it was like a rocket. It was like being on a rocket and then being hit by a missile, right? Because you're looking up and you're like, okay, we're going here, we're going here, we're going here. And then you're like, okay, no, we're not. And we're going down. And, when as a CEO or a company officer or an executive or like a board member, things get real really quickly, right? Because you end up in the crosshairs. There's kind of three things that begin to attack you, right? Employees want you to declare bankruptcy ASAP so they can claim their benefits, of course. And that's one angle. You've got your fiduciary duty to investors to try to rescue it. So you can't declare bankruptcy too early if there's an investor or a group of investors that could rescue it. And then you've got, in the regulated world, you've got the regulated angle where the regulators like, where's the client money? And they asked us for client money reports every week, and they watch the rundown. So you get into this, and if you lose client money, you're also massively criminally liable, right? So you go from like on this rocket ship to having three kind of laser beams, kind of on your head. It's a seriously crazy experience.
Yeah, I mean, it's indeed crazy, right? Obviously, I followed like parts of it over the last year, whatever like became public knowledge on the newspaper, so to say, covered it from like my perspective and the Embedded Finance Review newsletter. Obviously, hearing it from you right now, like your personal story, obviously that was meant to this episode kind of like capture your personal point of view and how you have seen all the things evolving. I think if anybody out there like listening to this probably can agree, it sounds a little bit like insane and in a way like hard to believe, but obviously that's like your story that you went through. But in this podcast, of course, I always want to make sure as well that we take something out of it. And we spoke about this before as well, to kind of close the episode off with a few lessons learned, and maybe for you personally, but also maybe for other people in the same situation. So it was obviously a very painful and hard few months for you, but what are the main takeaways for you that you would take maybe for you personally?
Well, for me, one of the main things is it's not that bad. I mean, if, my third child was born in May, right, a month before this happened, and my other two were toddlers, right? So you can imagine dealing with all that on no sleep is pretty much about as little fun as you can have with your clothes on. That's where we joke, right? But for me, if I can get through that, and now I'm doing all these new things and I'm good, I'm happy, I'm fine. If you can make it through that, then everything, you can get through anything. So I would just say to entrepreneurs and people out there, it's not that bad, right? If I can do that with that horrible, unjust situation with like a newborn, then you can do it. So that's the positive angle. I mean, more practically, I think you've got to choose your home jurisdiction very, very carefully. And if you're in the regulated area, you've got to have a look at the regulator, right? And you've got to look at how communicative they are. That's one of the things, right? You've got to see how easy are they to talk to. If you want to talk with them, are they willing to do meetings? What are they publishing? What are they pushing out in terms of the guidance? Because 90% of these rules are subjective, and they're not objective. It's not one or the other, right? And so you need to know their opinion on things, because that's how you're going to interpret the rules. And so if you've got a regulator that's refusing to publish like anything, or worse, they're publishing and then rescinding and then trying to sanction people on old notes that they had on their website, which is what the SFA have done. That's a massive red flag. It's a massive red flag. So it's all about information. Are they public? What are they saying? Oh, that's another one that I would say, a big error we made was to be too Europe focused. I would be more multi-jurisdiction as early as you can. I know it's hard because of resources. It's a lot of legal work and a lot of operational work, but it really is. Intergiro was worth 400 million euros when it went down. And that was probably an error to have everything on one leg through a Swedish license. So I would try to get multi-legged as early as you can.
Interesting. And obviously, I guess choosing your regulator, I think nowadays it's becoming a lot more of a, let's say, hot topic. And I guess, of course, you explained your journey as well. You got involved in the business when that decision was being made or has been made already. Plus also in the at that point of time, in those times, that probably like choosing your regulator wasn't such of a, let's say, hot topic. I think now in the last couple of years, we've seen more and more fintech companies getting for licenses in countries where they're maybe not really the main jurisdiction, and not just going for the countries that are like super, super easy, but basically finding a regulator who understands the business and who's supportive. But then, Nick, as you said already, you were able to cope with all of that. I think 3 kids itself can be quite a bit of, plus a newborn, one of them. And then, of course, all of this, super, super tough. But you're also saying you're doing something new. So obviously you don't have to share all the secrets, but I guess quite curious here among our listeners. Is it again fintech? What direction are you thinking these days?
I'm almost lucky that I became available with the AI revolution, because I really think this is a renaissance. But, for people like me, for kind of jack of all trades, masters of none, this is a golden moment to build. So I love to build. That's what I'm all about. So I've got 5 projects now. Only one of them is regulated. So yeah, only one of them is regulated. I've lost a bit of interest in trying to navigate that world again. So yeah, but I don't want to talk about them yet because they're all just early businesses right now. I'm vibe coding 2 of them, and the others are with some of my ex-employees from Intergiro.
Great. Again, thanks, Nick, for sharing your personal view of like what happened at Intergiro. Again, a couple of points I made in my newsletter as well. I think quite a few listeners have kind of followed at least 3 that, let's see, these points, what was happening with Intergiro. It was now quite interesting to learn your perspective of what happened. Obviously, we'll make sure to keep following your journey. I think also it's correct that the people now navigate to the website of Intergiro. There's a little bit of a digital tombstone, I think you call it, where you also provide a bit more information and facts and what happened there. Is there anything else we missed or you want to share with the audience?
No, I don't think so. That's pretty much everything. If you want to get hold of me, you can find me on LinkedIn, where I'm active. And I'm also pretty active on Twitter, formerly known as Twitter X. You can get me at roots _calls, ROOTS _calls. So catch you there.
Great. If there's any listener out there who wants to learn a little bit more, or maybe is building a regulated business, or maybe has some interaction with the regulator and maybe feels like you could be helpful,
please reach out.
Maybe they can ping
you
and take it from there. Thanks again, Nick, and until next time.
Thanks a lot, mate.
Thank you for listening. I hope you enjoyed this story. If you did, I would highly appreciate if you give me a 5-star rating for this podcast and or share the episode with your coworkers and friends. Thank you. Until next time.